What's happening, guys? I hope everybody had a fantastic weekend. Hopefully on Friday you saw the last interview we did with Brian Lee. He's been a great asset to the Traders for a Cause community. Each time the last 2 years we had him in Vegas, just really good at kind of the systematic approach, as well as some really good stories about what he had to go through to make it to the other side. And there's nothing that's easy in this career. You're always going to be faced with diversity at one point or another. But it's really good to hear these different stories, which is why I always try to share, anytime that I get blown out on something or have a huge loss, I always either make a video about it or use Sunday video to kind of talk about, one, what was wrong about it, what I did wrong, two, how I'm going to fix it, and three, sort of the mindset to kind of move forward. So I think that there's always a lot of value to hear, how different people started and, what they've had to go through to make it to, sort of the other side. We have a lot more interviews too, as well. Anthony's been doing a phenomenal job, and he's just got a knack for asking the right questions, having the right conversation, and feedback has been phenomenal. So we've got, I think, another 4 in November being interviewed, so those will slowly trickle out as well. We've got some other content coming that I did in Arizona, as well as some other stuff that is down the pipe as well. So, earnings last week, crazy. CVNA, nice unwind. I was late to it, but still, there's plenty of volume, plenty of range, plenty of action. And that's really all that matters. You need that liquidity, you need that range, and you've got probably 3-4 days of a solid trade potential. Maybe not every single day. Might be that first day, might have a consolidation day, and then that next third day is usually maybe a steady trend day one way or the other. Such as Hood, right? Hood is a great example of, that first day, just kind of sideways all day. I was pretty excited about it. But I realized that, the move is probably going to be the following day. So if it does peak out at the 1250s, like we were talking about on Friday, then, I want to participate on that short side. Ended up being a phenomenal trade. Most people take it off radar after they try on that first day. So the sooner that you realize you're stuck in a channel, the sooner you need to realize you should trade it the next day or the day after, once it breaks one way or the other, because that's going to be the friendly trade. Trying to anticipate which way it's going to go is when you get in trouble. Last week we had another one of those short blowouts, Huddy, HUDI. And hopefully everybody that's watched scans anytime in the last 2 months, 2.5 months, stayed safe. I mean, this is exactly why I've been repeating. For whatever reason, everybody still goes back, still wants to, nail the particular trades, but you got to understand where you're at in the cycle and where there's edge and where there's not. There used to be a ton of edge in these liquidation trades. You never know when they're going to dump. You never know, when they're going to be either a squeezer or straight down, but you do know which ones are likely if you do any bit of research just to kind of find out who the main players are amongst all of these. And then if you pay any attention of who's pumping stuff, right? But that doesn't mean that it's going to dump that day. And so what happened is a lot of times you see these trends go and go and go and go. And, then obviously we have that huge volume day, which ends up being sort of the dump day, right? So we're monitoring for that type of volume, that type of exchange. And before, that used to be legitimate dump volume, meaning sellers coming into the market and just dumping all their stock. Well, as that trade got crowded, the dumpers are shorts, right? So the shorts hammer. So people see that volume and they start, okay, this is it. It's coming in, the volume's coming in, and then all of a sudden it holds, right? Then maybe it dips down again and it holds. Dips down again and it holds, right? That is the warning sign, just like ILAG when we're talking about it at 420, that if you're, not covering, if you're not being proactive about that, be cautious because it should be staying heavy. And the same thing with Huddy, just like I was warning, it felt like a washing machine. What does that mean? It means that shares are going back and forth, back and forth. The day that it ripped before was only, I think, 400,000 volume. The other days, usually it trades, 20, 40, 50,000, maybe 100,000 max. So all of a sudden it trades, 2 million shares, and you feel more comfortable trading 5 or 10 or 20,000 shares, right? Because you look at the volume, you're like, oh, this thing's liquid today. I'm going to go ahead and take on more risk because this is the day. And you don't realize that all that volume is just kind of tossed back and forth to make you feel a certain way. And then they use that as a trap. They create all this volume, this downward pressure. And then guess what? They're not selling. Shorts sold. And so then they blow them all out. So anyway, anybody that's paid any attention knows that that's an avoid for me. I warned about it early in the morning. I warned about it again, that it doubled up the washing machine. And I even said these trades will make or break you, but with a greater chance of breaking you. And so if anybody participated, you probably got blown out. And on that note, yeah, I said in the room, I'm thinking probably 100 multiple times. But does that make me long biased? No. And, yeah, I can go back and say that would have been nice. It would have been, sweet to nail, the long at 30 and sell it at 100 or whatever. But if it was liquidation day, would we be having this conversation? No. So to me, it's just a better avoid all the way around. Other than that, let's see. I asked for some questions today. I'll do the video topics, and then we'll get into the questions. So video topics, just a couple quick notes. Most of everything that we've been going over has been working, is working, and no real reason to say it again or spend any time on it. So one of the key things is just don't let a pre 9:45 to 10 a.m. bias kind of keep you in the trade or take over. And I think that's an example of that would be something like NEO or any of the ones that are just sideways throughout the day. Reevaluate at 9:45, 10 a.m. plus. Are you just in this trade because you wanted to nail it? A lot of times the answer is yes for some of you, especially on some of these small caps where they're going sideways and you're like, maybe, it should pull back. I'm going to just stay in. And then it's 3 p.m. and you just wasted your entire day. So reevaluate 9:45, 10 a.m. plus. Is it doing what you expected? If the answer is no, just get out. You'll be surprised how much better actually you feel, psychologically, emotionally, and just you won't be as exhausted at the end of the day. Trend joins, 10 a.m., plus. So when we're in an earnings market, we've got a lot of those steady fades, right? The problem is sometimes they've got the gaps and then they just sell off all day, or the gap downs and then they rally back red to green. So if you've got your bias at 9:30 to 9:45, then you might be on the wrong side, and then it just is going to grind you all day. So I always like to reevaluate 9:45, 10 a.m. plus, and just make sure that I'm on the right side of the trend at 10 a.m. If I'm not, then it's a waste of time, even if you get right back in. But in my opinion, you should just be out and wait for the setup to prove. And like NEO, if something tests 2 or 3 times and it does not do what you expect, such as NEO with the 1125 level that I gave the room. I said the only spot that this thing's going to break down, that the sentiment is going to shift, is 1125. And it dipped down, rebounded, dipped down, rebounded, came back late day, dipped down, each time right off that 1125 level. So knowing that should have broke means you should not be sized, you should not be anticipating, you should not be aggressive, and you should probably be out of the trade. If it breaks under it, you can always get back in. And channels, you guys saw a lot of examples of that. I tweeted it out this week as well. And I think I have, let's see. I have a couple examples. We did it on PKBO, the channel, and where I kind of look for the exhaustion. And then when you draw those lines out visually, it reminds you that you should be covering here. And a lot of times if you put your bids in there, you'll be happy that you covered. And usually, and especially in this market, you only have a short period of time to do that. Otherwise, it ends up going back up the other way. The other couple were SNTG, which was another one where it blew out a lot of traders that were maybe a little bit too aggressive. They do this big flush down, ramp back up, flush down. And if you notice, it held the same level a couple times. Then it blew everybody out that was too oversized. So again, thinking about, Should this have died? Is it holding trend over a particular level? And am I, being overly aggressive prior to 10 a.m.? Let all the emotions. Everybody is doing the same thing in this market. Everybody is fighting the same names, trading the same names, shorting the same names in small cap land. So you need to build that into your strategy. Yeah, everything that you used to do probably still works. It's just either delayed an hour or delayed by a day, right? And you saw that with VRAX. VRAX was another one the day before where it kind of ramped up, came in, all the shorts are doing great, sideways all day, ramps up a little bit towards the close, which is just kind of that intraday cover. Next day, gap down, and then obviously they also had an offering too, which assisted with that. SATX was another example this week, looking left, looking at prior levels where it had trouble, and then CVNA, obviously. Less of the original entry that I had, but more so if you weren't there prior, 920 was the level that we're using in the room. So hopefully that helped traders out this week. So getting back into the questions for this week. So when stock picking, do you consider sector rotation in your scans to see which sectors are weak or strong and what stocks from that sector are more likely to play out? Absolutely. In earnings seasons, for example, on Friday, NEO was stronger than LI and XPEV, right? So I want to focus on the ones that are the weakest out of the bunch. A lot of times people always focus on the stronger ones because they think, hey, this one's up more, this one's going to pay out more. But if it's staying stronger, that's relative strength. Not to say that it can't come in, but you want to be focused on the ones that are proving the weakness that you anticipated, that you're expecting. And if NEO is kind of bucking the trend while XPEV and LI are unwinding, then I want to focus on those. Because when NEO does pull back, these ones are going to come back even, faster. So that's one way. But yes, I always look to kind of see, what's leading in a particular. It's not always sectors too. It could be themes such as, low floats or IPOs or SPACs, or it doesn't have to be something such as shippers or oil or whatever. So you just got to kind of figure out what is of interest at the moment. And right now small caps is usually like one flavor of the day that everybody's trading. So you need to build in that crowd mentality. You need to be one step ahead of the crowd. Otherwise, you're just going to get chopped up. And then the other thing right now is obviously earnings reports. So that would almost be like a sector or a theme in itself right now that, it doesn't matter really what they report or what they're doing. All that matters is the volume and the trend that's associated for now. Once things start to cool down, then yes, we'll, start to go back to the cycles and the theme starting to pick up. How do you adjust risk when sizing into a trade and your average is lowered? I mean, that's the idea is to protect your average. So one of the biggest things that I think I do, and I always remind people in the room is, when you start into a trade, right, and you scale in a little bit and it does exactly what you think, just wait, because a lot of times people hammer in, right? They're all excited it broke down that level, but many times in this market, it dips under that level and comes right back up. And now you've ruined your average. You have double or triple the size, and now you have an emotional attachment to the trade. So always just hands off. Let it break down. Let it prove that it's going to break and fail multiple times at that key level. And if it doesn't, which many times in this market, it doesn't, then you'll be happy that you still have a good average. But you want it to prove multiple times. The more times that it fails, the more longs are getting on the backside or on the wrong side of the trade, and the more shorts have been kind of covering in a panic almost because it's starting to coming back up, and they're maybe oversized, they're scared. You let that rotate out, and then you start to scale in. Is how I trade. When a stock has a big range, you pick your entry, scaling in, reach full size. How do you determine your targets? Or just scaling out along the way near, dollar targets, things like that. So, for example, when I start into a position and I'm kind of anticipating that it could potentially flush to X level, usually that would be looking left. It would be looking to a prior level of support, a prior key level that it was, kind of hanging around. I want to have in this market, I want to have some orders ready, especially if it's a thinner style name. That way, if it flushes out, I'm part of that. Because right now, as we've talked about in prior Sunday scans, liquidity is a little low on some of these. So when it flushes, that's your liquidity. And then you're either there or not, and then it kind of can come right back up on no volume. So you want to be part of that. If it stays heavy, you can always rescale in. I don't think I've been too crazy full size or anything like this, like that in this market, to be quite honest. There's been a few trades here and there that definitely give me the conviction to scale, but it's just not that style market. Right now, it's more of, let's get on the right side, let's scale into the trade, it flushes out, I'm downsizing. If it stays heavy, I might resize back up. If not, then I'm gonna work out the rest of the trade. So it hasn't been that A+ market for me personally in a month and a half plus. Some of them sneak in there, and if you remember, prior to like COVID, usually we would look for an A+ trade once or twice a month, and my conversation was all you need is that once or twice a month, and nailing those really changes your year, right? And it changes the trajectory of where you're headed. And then COVID happened, and it was like literally an A+ setup twice a day, 3 times a day, right? So then we went back to once or twice a week. And that's kind of where we're at now, is like once or twice a week of really a real solid setup. So those are the only ones that I really scale into. Unless it's something, CVNA, I would feel extremely comfortable. I did scale into that quite a bit. But again, I wish I had been there at 12, obviously. So I always like to at least be present. Proactive covers is what I call them. So look left. Hey, if it breaks down here, the last level that it was kind of hanging around was right here. I'm going to park myself right above it just to, get any of that liquidity. Next question. I have an engineering job, not confident enough to quit my job. Did I start trading from the beginning? And when people are ready to start day trading for a living. So I started in college. I was good to go when I graduated. So no, I never had a real job. But I would suggest to just keep doing the same thing over and over and over until you can't. Try to juggle both, and because you don't know what kind of stressors are going to come when you quit your job. And if you don't have consistency, and it's not just about money, it's about money that you've pulled from the markets in order for you to, kind of make that decision. Just because you've saved up a bunch of money does not mean that you should quit your job, because that doesn't mean you've extracted it from the market, right? You should be using money that you've taken out of the market to make that decision, rather than assume that you're going to be able to do that. And on top of that, maybe you were great in one market and then, you're not in another. So I personally would recommend, trying to do as much as you can until, you don't need to. And you'll know when that's right. Might be a tough juggle, but I can tell you one thing is the stress of having to perform, having to make X is going to be a lot worse. So don't try to rush that exit. Just do it until you can't do it anymore, in my opinion. And, that'll help you out with that. What do you think about systematic trading and deep data collection? Have you ever been such a type of trader? I surround myself with people that have a lot of data on particular setups, especially in small cap land. So yes, I understand what a high probability type of unwinder is and things like that. But it's not something that I personally focus on as far as systematizing all these different types of setups. And 90% of the time this happens, 82% of the time that happens. I know what setups are likely, but it's not something, just because I have so many different styles of trades and I'm always doing different kind of strategies that my data would be all over the place. Last but not least, what is the most efficient or effective way to recognize exhaustion at a particular key level in order to start in or scale into a trade? So let that all happen. It used to be where you could anticipate that, right? Where it would just stuff and slam and like that was it. That was a stuff move. It's over. And probably like 2 years ago, 3 years ago, mainly COVID, I guess, that stuff move becomes the trap, right? It stuffs, and then if it absorbs, all those shorts that just came in didn't really get out, starts to kind of slowly grind back, stuffs again, does it again, and then blows them out. That's what you have to be afraid of. So every single time we have a situation like that, especially in the room, I'm always talking about, okay, huge stuff move, but let it, confirm. Let it prove that, yes, that was the top. Yes, that was a stuff move. Yes, that was an exit. And more often than not, you'll realize that it ends up just holding on. And so you let all those other people exhaust out instead of you doing it. Let everybody else pay for the information. And then once they kind of work out, then you have a much easier style unwind because you're not fighting with all the other people that just jumped in and they're trying to figure out what to do as well. There's a lot of emotion at that point. For me, I'd rather just wait for everybody to kind of figure it out. One example of that is SOBR. Everybody was looking for that fade, looking for the fade. And guess what? You took it off radar and it actually faded 50% off the highs over the last week and a half after you tried it probably 20 times, right? So that's just a good example of just wait, draw your lines, draw some, put in the price alerts. We have the price alert system in IU. Let it hit, let it remind you when everybody else forgets. And then you make the money while everybody else is exhausted from it. So anyway, that's the first part. We'll get right into Sunday Scan in a moment. All right, guys, so for the second part of Scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're looking to be told what to buy or sell, you're in the wrong spot. If you're looking to learn at, kind of how I prepare for the week ahead, what I'm looking for, what I think makes a good trade, you're in the right spot. Let's get right into it. NEO, ideally, we've got some sort of blow-off move here. They did a great bottom formation. They did a great kind of a flush out. Everybody thought it was going to zero, and then it comes back up, and then it's like, all right, it's going back to the lows, and then bam, 2 days it's back up over the prior highs of the rebound. So at this point, I'd love to see some sort of 12 kind of gap. I'd love to see even higher. I'd love to see it kind of almost want to come and maybe test into at least where it's at right now, into this first gap, 12.20 range, 12.15, and ideally up towards the 13. That would be ideal. But as you guys know, it's hit or miss with China names. You're either gapping up huge or you're gapping down huge every morning. So ideal zone would be maybe to 12, 12.50, and then some sort of fade off. But as always, as I always say, just be patient and be cautious off the open. There's always that 930, 931, 932 kind of candle on PDD and BABA and all those types of names, FUTU, you name it. And there's a lot of risk there. So if it has a huge rip, then I might react to that. But otherwise, I'm going to be kind of, let's be patient and kind of see and let the trade set up. But higher the better. Failed follow through is ideal. CVNA finally came in. This one's just a disaster all the way around. This doesn't get much better than that. I fumbled that one for sure. If, in a hindsight kind of manner, let's talk about, a setup that we always talk about. We talk about the failed follow through sort of setup. Obviously 1240s, 1250 level, just to round it out there, right around there. You can see that was like kind of a base, starts to be the peak, comes back, retest, and then it breaks under this 12 mark. Never looked back, and I didn't get, to participate until right around this level, just because, once again, you see another failed follow through setup that we've talked about. We went in depth with this whole entire concept, last time on the video. So that's a trade that I like versus 10-30. So when 10 breaks, I like that 30 risk for the potential of an unwind. And just like I wrote in the room, I was thinking $7 to $8 for the unwind. So I think we got to like 820s or 830, something like that. But at any rate, I would love to see some sort of push up. And, if that's the case, I'm just trying to get a little bit of this action. Here we go. Maybe up to like the 930 range. I probably would use that same level as Friday, and 920 was the level that I was looking for the exhaustion. So, that level was kind of looking left. I always kind of think about, if it's going to blow out through 9, you don't want to be emotionally attached at 9:10, 9:12, stuff like that. So I always give myself, 9:20s is sort of that target area. Same thing like 8:80s, 20 cents above and below, just to give a buffer so you're not emotionally attached to whatever's happening. Let it blow out. You can see here, kind of exhausted out, came back, retested, and then, failed off. So that was a really nice trade for us on Friday. Ideally, more action to the upside. But again, if you fade it and it flushes out and it's great, and then it starts to grind back, don't turn it into a full day. I'm going to see what it does, because that's the famous last words, as we all know. Roku and LUMN. So both were earnings plays, and LUMN was a huge dumper. We're either going to have a nice, in my opinion, 50, 60, 70 cent, dump or a rally. Whatever the case is, I want to be prepared and probably join that trade on Monday or Tuesday. And Roku, we've got a ton of volume, ton of action. This one's been a great trader for us the last 2 days. Thursday into the close, and then I think it was mid-morning on Friday. So trading it well, seeing it well. So I'm keeping it on radar for another day or two, and then you'll probably see me just lose it off radar, just because the volume's going to probably go back to normal. Under the failed follow-through setups, those are the ones that doesn't mean that I think they have to go down. I'm just interested for once they do head down. So Peloton reminds me of Snap. So Snap had that, earnings, and we talked about this last time, but, kind of ramped up, and I wanted to see it kind of blow out and then sit back. And so that's exactly what I'm looking for Peloton. So even though it's on failed follow-through, I'm rooting for it to go higher. I'd love to see it kind of blow out and then sit back down and have a nice opportunity to fade. SNCG was a fantastic one on Friday. We discussed this in depth, and it worked out really, really well. Kept everybody safe, and you can see nice steady base starting to form in the 460s range, 470s before the blowout. Then we were stuck in that channel that we talk about, just because it's the kind of the trade of the day for small caps. So you want to stay away from size when it's stuck between a couple different levels. And you see they did the nice end of day ramp, which is what we were looking for. I specifically stated that I'd like to see kind of a ramp and an exhaustion move before they walk before the end of the day. So that was nice to see. It worked out really, really well. Probably could have been a little bit more aggressive, but again, if it had held trend and I was trading too much size, then we wouldn't be having this conversation. FNKO, nice long trade on Friday. This one was a nice one. I just kind of waited for it to firm up over 820s, and it had a nice push, and then ended up fading all the way back. So typically, quick look. I usually look at, where was it hanging out before? Where did it have trouble? So ideal kind of exhaustion zones, 820 to 860s. And then possibly fade it back versus that 860 sort of level. If it starts to firm up and it starts to make a base over 860s, then, you have one of those situations where it could be like a snap, and after a day or two, it could start to form a base and rally. So again, this is going to be one of those 10 a.m. plus trend joins, but for now, I'm just prepared for any morning shove and then fails. Typically, something like this, we might have 20, 30, 40, 50 cent kind of move, and then it just comes back to flat. And that's the trade that I would look to take advantage of. Other than that, we've got PKBO. PKBO I'm going to be watching for. This was a nice one on Friday as well. And nice exhaustion move. You saw my trade on that. Posted it on Friday. For me, ideally, we see some sort of push back up towards where it had trouble, and that was that 850 line, right? So ideally, morning shove, fails at 850s, and falls, from that point forward. If it starts to firm up, be cautious. There's no reason to fight that. The other one is SATX, and ideally, we get some sort of kind of morning shove, maybe into that VWAP level, right around this area here, which is, kind of a congestion point, and then starts to fail from there. But again, just be cautious. The more people that are prepared, the more people that hammer it, more likely it goes into circuit. So, I personally want no part of that front side action. I want to see the exhaustion move. I want to see, people kind of getting bent up, and then I will start in. And still, even at that, these are not crazy size type trades, because all it takes is that one that you're on the wrong side of, and you end up in a bad spot. So let's see here. There we go. PBYI. Next is the continuation section. So continuation section is, I'm looking for trends that I potentially would join. So I don't want to chase this, but if dips start to firm, it starts to base at 260s after a couple times, 255, 260, 260, 265. I want to risk towards 250s, and I would potentially take it long. No position at the moment, but definitely a nice setup potential. Kaba, so far so good. This was a nice long setup. We talk about the wicks every single weekend on Sunday video. So I had participated in this breakout. I sold a bunch on Friday, and I will rescale if it holds trend. If it starts to peak out at 220s, then I'm no longer really interested. But I've sold more than half, but currently have a position on that. Duo has been a nice one. The first move that we talked about was a doubler, and then we had a nice push off the open, which ended up being another nice trade. Nice push late day. This one, there's not a huge edge until we see what happens, but it was the highest volume day ever. So if they want to trap, if they've got a bunch of shorts, then we've got potential here. But if not, then don't overstay. I am a seller on every single big pop. And I'm trying to, maybe reaccumulate when nobody wants it the last couple of days. So, so far so good. But again, if it starts to firm up and it should have died, then I have a high conviction potential trade. But it's not something that I'm, super excited about until shorts are really on the wrong side. NXW, I joined this trend. Nothing I'm excited about, but it just feels a little trappy. It seems like a buyer has been in the tape for quite some time. These types of moves kind of bring in the shorts, and if they start to hold after that, that's when I start to get really, really focused. Same thing, just like the MMAT trade that we've been talking about all week. So far, so good. Said I was interested in all dips. We've got all these wicks that we talk about. Nice breakout there. At some point, once it blows off and maybe has another high volume day, if it goes to 220, then I might be interested in looking for the backside of that trade. Couple other charts I'm interested in. APLD, no position, but this was, I think, an uplister. I was really interested in it back here. It had that potential, but it never turned into anything. So watch this one, though. It's starting to set up very, very nicely on the daily chart. Excuse me. 250s, 240s, 250s needs to kind of base. If we get a Bitcoin move, this one probably could go. But you can see why I'm interested. It doesn't mean you got to chase, but I'm interested in potentially getting along on dips. And then if it's right and it continues to go, I would scale. I would not just buy the breakout and assume that it has to go. It's very much like this FRZA. FRZA is a liquidity trap, and they keep on absorbing it, but it doesn't mean that it has to go. Maybe over 260s, if it starts to base, that's when I might start to have a higher conviction. But sometimes people see this trap and they think it has to go. But if the volume comes in, which is the cover, and it doesn't really budge, then you got to throw that idea out the window. So, you want to be proven that this starts to base and firm up 260s, 270s and goes. And at that point, my conviction, my bias would shift towards the long side for sure. Freak was one that I joined. Always been a nice trader. Nice setup, very similar to some of the other ones that you've seen recently. And have a small position there. And LYLT was the same thing. No position here, but nice setup here. So I'd be watching if it starts to base over 150s. So far, the swing moves have been really actually working well. RUM, you guys know that I was long that one, scaled into that. That ended up being a really nice trade. I was thinking 12s. It went 13s and above. But so far, so good. That's about it, guys. So I think I forgot to mention the winner for this week, and that is Jared. Left a comment last week. Email me, webmaster@investorsunderground.com. Leave your key takeaway with the timestamp, and we're going to pick a bunch of winners next week, t-shirts, and a month of IU. And that's about it. So we'll see you guys in the room. If you have any questions about joining or any questions about what we do, et cetera, just reach out. There's always like a little pop-up on the website. You can talk to Tyler or Sean. But that's it. So enjoy the rest of your weekend.